The big major concern of this military event was a much broader fallout to kind of the U.S. markets. The markets are now reversing a lot of that view, saying, okay, this is pretty much a one and done event and things are going back to a more normal situation here. But here's what you need to know before the bell this morning. We're going to run through this morning a few different areas of the markets that are being impacted potentially or historically been impacted by geopolitical military conflict. And we'll see what these are doing this morning. So let's start with the S&P 500. That's obviously the first issue up. Market futures were down fairly sharply last night. We were down immediately after the attack. We were down about 1%. Then a little while later, after things kind of sank in, futures were off about 0.5% this morning. Futures are actually green right now, just a bit. We're up about 10 basis points, 11 basis points on the S&P. We'll see. But again, this is still early. So, we'll see how things look as we get closer to market open. But two things that are going on. Friday, the market sold off here a bit, and we're sitting right on the 20-day moving average. So the market continues to really kind of work through this support line here, holding that support. We're working off, and have worked off about half of the relative strength overbought condition. The momentum indicator is also is on a sell signal here and beginning to work itself off. So we're starting to work off this consolidation that we've been in now really since May the 11th is beginning to work off some of that previous overbought condition. If we get a little bit more sloppiness this week, we could actually get the markets oversold enough. Now, the month of July tends to be fairly strong for equities. That's because you're going into the second quarter. You've got earnings season, lots of support. Buybacks come back into the markets around the middle of the month. So there's a lot of reasons why July tends to be a fairly strong month. So again, there may be a decent entry point by the end of this week. If we get a little bit more selling pressure this week, we'll probably set up for a decent entry point to add some exposure going into the month of July. So we'll kind of pay attention to it this week and adjust portfolios as we need to. The other side of the coin, of course, is the dollar. And we've talked about this for a while. Friday, we published an article on the website called "The Death of the Dollar is Greatly Exaggerated." And part of what happens over this weekend, and of course what happens this week, could lead to a fairly strong pickup in the dollar. But we already saw the dollar rallying over the course of the last week because of these rising tensions between Iran and Israel and, of course, the United States now. And so we're likely going to see the dollar's already moving higher this morning. So there's a huge short position on the U.S. dollar. So if this dollar begins to get traction and we get above, say, 99.100 on the U.S. dollar index, we could see a fairly sharp rally in the dollar here as those shorts are forced to cover. Again, there's an abnormally large short position on the dollar right now. So there is a good bit of upside catalyst. You've just triggered a buy signal. Relative strength is improving. So there is some underlying momentum right now building in for a dollar rally. Now, that doesn't mean the dollar is going to go off to the moon here, but you can see a fairly substantial rally to 102, 103, and that's going to weigh on assets that are traded in dollars. So, for instance, when you take what you're looking for here is assets that trade non-corollary to the dollar. So as the dollar weakens, since a lot of assets like oil and gold and other stuff trade in dollars, a stronger dollar is going to weigh potentially on dollar traded assets. So just kind of pay attention to that rally in the dollar as it relates to other assets that trade in U.S. dollars. Oil prices, of course, big concern right now is the Strait of Hormuz. If that Strait of Hormuz is closed, that potentially is a backbone for much higher oil prices. Oil prices are falling a little bit this morning. They had spiked up overnight because of this attack, but we're seeing those kind of cool off here just a little bit this morning. So a lot of the concern yesterday, particularly with the markets, was this impact of this, kind of really becoming much more widespread. It's starting to look like, and the markets are starting to think, that this is going to be just a one-time event and that's done. We're going to see, and again, there's a lot of things still unfolding here, but oil prices are starting to calm down here just a bit. Gold prices also had a lot of early gains yesterday because of the attack. Those are already starting to give up a big chunk of their gains this morning as well. So again, the big major concern of this military event was a much broader fallout to kind of the U.S. markets. The markets are now reversing a lot of that view, saying, okay, this is pretty much a one and done event and things are going back to more normal or more normal situation here. So again, don't overly panic this morning, in particular because of that news headline event. Let's pay attention to markets and then just navigate them from here. But that's what you need to know before the bell this morning.